I will be comparing two right leg W patterns in this example and sharing with you how you can see one has a significant gap up and the other one does not. It actually goes down. And it's interesting to see these things and read what the indicators are telling you, because the right leg W pattern is really powerful in its reaction. And what I'm trying to say there is that if you had a whole bunch of one indicator, you can pick one. It doesn't make any difference. That indicator, like if you had 10 indicators of one particular identical pattern, and you had 10 right leg W patterns, the right leg W, I should say right leg W higher patterns, the right leg W higher would typically react stronger than other patterns. And obviously it's relative to conditions or supporting evidence, but generally speaking, we see right leg W higher patterns react quite strongly. In this example, I'm going to be talking on the green vertical line right here. And in this case here, it closed at 53 and then it opened at 58 and closed at 59. So it went up almost $6 next day. And in this particular case, we have 21 identical indicators, identical right leg W indicators. But the one thing that we also have with this is several conditions of divergence. The first one I'm going to point out is the trend gray is up and red and green are down. As always, when the trend gray rules are trend gray is up, or if trend gray is down, the other two need to be up. If green goes the same direction as gray, most of the time you don't get the same type of response, because the divergence is really between trend gray and trend red, one up, one down. And when trend gray is up and red is down, you typically get a gap up. You typically get a next day up, and with enough evidence, you get a gap up. The other divergence is trend red is in a TOC pattern with a low angle down, whereas power red is in a TOC pattern that's pretty normal. And so that in itself, when you have this long vertical line going up before it turns down, that line difference in relation to the downturn is what makes the difference. And maybe I guess I said that wrong, because you look at the long line of the going up, but the power red has about the same line, whereas the right leg only goes down a little bit and the power right leg goes down a lot. But in any case, I think you see what I'm trying to share. The other thing is that price red and we had a crossover in price red and green. Red was highest, and now on the vertical green line it's lowest. When you have price lines that cross over each other, it's a divergent situation. Zip Pink, Swing Zion, and the three price lines are our price barometers. And when you have one doing a crossover, that is important. You also have the same thing. Swing Zion is highest on the day before the vertical green line and lowest on the day of the vertical green line. And that's a crossover of pink. Now, I want to compare. Now, though all of those are types of divergence that we have. If you notice the power so that you identify the gaps in this situation, the power Zion and the power 4 are all under power orange. That's basically a power 5 under power orange, which is a normal location for a gap. And as well, we have, obviously we have the shape patterns all the same. Now, the next one I want to compare is right here, and that is again, this is a right leg W pattern, and it has significant differences. Obviously, we look at the price, one gap's up and the other one has a big candle going down, so it's like they're in opposite directions. Now, let's note the differences that we see here. Number one, on the pink vertical line in the trend chart, trend gray, green, and red are all going down. There's no divergence between the three. They are also all underneath the blue line, or the trio line, I should say, and red has been down. Red went underneath 1, 2. This is the third day that trend red is underneath the 0 line, and that is indicative of a continuation. I mean, keep in mind, a downtrend starts when trend red crosses under green. And so trend red crossed under trend green 3 days ago, and it's finally, obviously on the pink vertical line day, it did go down that day, but then it really goes down the following day. Other key elements are that power pink and blue crossed over orange, and that's indicative of basically of a strong downturn, or that day that it crosses under is strong going down. And then, of course, if you have contributing evidence or supporting evidence, it will continue down. And one of the primary supporting evidences on the pink vertical line day is that power yellow is highest and going down, along with zip yellow highest and going down. And again, those are yellow twins. And when they're highest and going down, you're in a downtrend. When they're lowest and going up, you're in an uptrend. And all the other lines are moved out of the way. And when those two run together, the yellow twins run together, you are in the middle of a trend, either up or down, and that trend is oftentimes pretty strong. And so that is a pattern in itself, telling us that on the pink vertical line day, which is the right leg W, now keep in mind we've got a lot of right leg W lower patterns like the trend gray, and it's mixed. We got lower and higher all over the place, and I didn't actually count them, but there's a significant amount. There's going to be 2 less because Zip Zion and Zip Green are not in the right leg W pattern, and that may be the only 2. So there are a few less. Well, obviously we have the others like trends that are in right leg W lower patterns, which is different than a right leg W higher pattern. Now, keep in mind also, take a look at your trend yellow. All the trend trio lines are above 0, and in the green vertical line day, all the trio lines are under 0. And that again, I mean, you can reflect that information in looking at how you see the reaction of the indicators just in the location that they are. Zip pink on the vertical green line day, or excuse me, power pink on the vertical green line day is minus 2.75, and oftentimes we draw the line and say it's really powerful at 3, or I should say the reaction that you can get out of power pink when it's at minus 3 or under is stronger. and than it would be when it's higher than -3. And so that's the idea that I was trying to convey there. Like now, with that, you do not have the divergence in the trend gray, green, or red like you did on the green vertical line day. Likewise, you've got power pink just crossing under orange, which is indicative of a continuation. You have the yellow twins that tell you that that's an entire pattern in itself that's telling you, supporting evidence that it's going down. In the case of the swing pink, in the case of the vertical pink line, interestingly, just be conscious of this, because it doesn't always work this way, but it can help you to see the truth. And that is that in the green vertical line, Zip Zion was highest and lowest. On the pink vertical line, swing pink is highest and lowest. When swing pink is higher than swing Zion, what it's telling you is that a leading indicator, swing pink, is telling you things are going up. But in the case of swing pink being highest, it means that the price didn't follow along with the indicator. And so the reaction, the strength is not there. So when swing pink is highest, it's actually a weaker move. Directionally, it's telling you where it's going, but price-wise, it's telling you that it's not going as fast. And so when you understand what I'm saying there when I say there's not the strength on the vertical pink line that there is on the vertical green line. Also, you have Zip Yellow and Blue. They're real high. Zip Yellow is at 49 and Zip Blue is at 40. And that's vastly different from the green vertical line, which has Zip Yellow at 12 and Zip Blue at 12. And so that is indicative of you're just how do I say this? One thing you recognize when Zip Yellow is near that 50 line, obviously you can think that Zip Yellow is going to react and go back up. So that's one strong implication that you have when you're down touching close to the 50 line. However, the issue that I'm referring to is the location of Zip Yellow. Whenever Zip Yellow is low and price is going down, or I should say, when price is going down, Zip Yellow is low. I mean, you're in a full-blown downtrend. Zip Yellow can stay under the 15 height or even the 20 height for many, many days. And that's just a continuation of a downtrend. When Zip Yellow runs high, like above 70, then we're in an uptrend. And another way you can think of it is in the red spikes and the red peaks. When you have a red spike with both yellow and Zip Yellow and Zip Red going down, yellow stays high. And because it does stay high, or I should say when it does stay high, the reaction is to go back up again, supporting the evidence of the Zip Yellow location. And so when Zip Yellow is at 50 versus Zip Yellow being at 12, there's a potential at least that Zip Yellow, if it does go up, the reaction is not going to be as strong as something that goes up from 12. And obviously the crossover zero is the key, one of the key components in many different, I guess in all of the charts except even in the price chart, but the lines don't often go under zero on the price chart. And of course, we're dealing with 50 on the zip chart rather than the 0 line. But the other thing that you'll notice too that corresponds with your zip yellow at 50, if zip red, the day before the pink vertical line, zip red was at 70. On the day of the pink vertical line, zip red was at 8. And so when zip red is just taking a huge dive like that, it's telling us something ahead of time, and it's given us that information that the pressures within the market have really dropped, and it doesn't, like, for example, in that on the pink vertical line day, zip green is at 27. That doesn't mean that the trades or the people trading in the system have picked up on that. They haven't even started getting out yet, because zip green is at 27. So you can see how fast these lines tell us the information that they give us. And so that corresponding relationship between zip yellow and zip red. In other videos, you may have heard me talk about when zip red goes over 30 points, because that's usually the boundary line that we like to deal with. Sometimes we'll deal with 20 points, but definitely when it hits 40 or 50 points in a line length, it tells us about a upcoming reaction. It does not necessarily tell us about direction, but it implies something. For example, when zip red goes from 10 to 90, it's the fact that it was above 90. Even zip red is likely to come down the next day, but price will go up. And the zip red line moves faster than any of the other lines in the system. And zip red and swing pink are the quickest lines in the system. Swing pink will oftentimes even move as fast or faster than zip red, but swing pink does not have the line length difference that we see in zip red. And so the result is similarly the same going the other way. And the day before the pink vertical line, zip red was at 70, and then on the pink vertical line day, zip red is at 8. So it's dropped 62 points there. And even if red would have come back up a little, the price would have likely, gone down at least to some degree. And so this can be hard to, how do I say this? This can be hard to see from the reaction between things, but you need to put the indicator line length difference together with the line length location, because that will help you make that connection. I've been working with them so long that I sometimes forget to say that or give you the information properly. But these two lines are a classic example of it. Both reds have gone down significantly, but one zip yellow is way down, meaning that when it does go back up, it's got a long distance to go back up, because I'm thinking uptrend for sure. And if it's a gap up, great. I mean, one day going up $6 is like 5 days going up $6. So however you look at it, that's the general idea behind the situation, and hence the comparison between two right leg W patterns. Obviously, we see the strength. We had 21 right leg W higher patterns versus about the same. Maybe there was about 19 or 18 but several of them were right leg W lower patterns. Again, there's not the strength in that, and obviously in this case there is directional difference. But the directional difference was not in the right leg W's, it was in the other patterns that we had, like the yellow twins and that type of thing. We also didn't have I want to share this with you right here. I forgot to mention that on the pink vertical line day, the green line, we did not have a crossover divergent condition, and that's indicative of no power, no reaction power in the price line. The reaction comes from the crossover, and it does not necessarily the crossover is just another pattern that supports the situation. When you have a crossover, it's defined as divergence, but you can have a crossover and that's the only thing you have, and so you got one piece of divergence, and one piece of divergence may not cause much reaction, but it's the multiplication of many types of divergence together that gives you the reaction that we get, just as we see here in this case. So I did a video on this same symbol in describing different things, but it had just so many key issues to it. I wanted to double up again and explain some other things that I didn't get to explain in the other videos. So enjoy your time trading. The system is fantastic. We are excited about it, not needless to say, and we can see gaps coming. We can identify uptrends. The whole system was built on price reversal recognition identification, and we look for strength at the cycle tops and the cycle bottoms, and just as in the process of making the decision that this was the basic emphasis that we wanted to place on the system, that those strength differences, especially at cycle lows and cycle highs, it then evolved into finding gaps before the gap occurred, because that was not our intention from the beginning. Our intention was strength. We just really wanted to get a hold of strength, because if we could grab strength, then we could hand pick the ones with high probability and high volatility. So that's kind of how things evolved in the system that I just thought of it that I'd share. So have a good day.